Welcome to the Digital Gold Mining Podcast, where innovation meets opportunity in the world of cryptocurrency mining. I'm your host, JohnPaul Baric, entrepreneur, Bitcoin pioneer, and the CEO of Mining Store, where we specialize in modular data center solutions and driving financial access to Bitcoin mining worldwide. Each week, we bring you expert insights, cutting-edge strategies, and real-world stories from the forefront of Bitcoin mining. Whether you're a seasoned pro, a curious investor, or someone looking to understand the power of digital gold, this is the podcast for you. Get ready to explore the evolving world of Bitcoin mining, from energy innovation to the latest tech, market trends, and how to build long-term value in a decentralized economy. Let's dive in and uncover what it takes to mine successfully in the age of digital gold. Welcome back to Digital Gold Season 2, where we dive into Bitcoin's energy debate with Alexander Neumueller, Cambridge University's climate and digital assets expert, architect of the Cambridge Bitcoin Electricity Consumption Index, and a crypto-native leader bridging mining and policy. With deep roots in finance, academia, and media, Alexander unpacks Bitcoin's potential to decarbonize the grid, harness stranded energy, and redefine sustainability while guiding global institutions like the World Bank. Today, we'll explore mining's evolving role, debunking myths, and envision a greener future powered by Bitcoin. Alexander, welcome to Digital Gold. I'm excited to have you.
Thank you very much. Thank you for giving me the chance and inviting me to your podcast.
So you spent a few years in the corporate banking and asset management section. What inspired you to leap into Bitcoin mining and blockchain research? Was there a specific pivotal moment you remember, or did it slowly creep up?
Yes, definitely the latter one. So it did slowly creep up. So basically, I started quite a long time in banking, had multiple roles. I was starting basically very early on in my life in more kind of the retail, then corporate banking, then went into basically treasury, kind of prop trading was at the end, but I did in the bank. I went then on at some point worked for an asset manager where I looked more into this kind of investment sphere. Basically, me getting into being interested in Bitcoin goes back a bit to my university days, where I was always quite interested specifically in Austrian economics. And there is some sort of like relationship, right? But at that point, it was really going back to, I think, 2011, 2012. So when we talk about Bitcoin at that time, it was very different. Not is today, but kind of how people perceive Bitcoin in a completely different world. And I need to admit, I was ideologically interested in this new technology. I was tech savvy, right? But not to a very large extent, possibly not to the extent that I would have been, because currently nowadays so much information about Bitcoin is available. But at that time, it was very hard to get anything. And then it was more kind of Bitcoin forum and these sort of things. And yeah, sometimes it was quite technical. And it was also a different kind of environment in terms of specifically with, how Bitcoin was being used at that time. So I could ideologically somehow identify this as why I was interested in the subject. But at that time, I was unfortunately not investing in it, but I kind of kept tabs on it. So I was just, okay, I may not invest, but it's just interesting to see how it evolves. And I kind of kept interested. And at some point I started mining myself. And a bit after I did it, I kind of started it. So not for doing it myself physically, but I was basically outsourcing it essentially. And in 2019, I formed my own mining company, but everything was done fully remotely and everything was set up in China. So basically this was how I got more generally involved in this space. And at some point I went to Cambridge to study before my role at the Center for Alternative Finance. And this time, 2021, right, was a bit of a tough time then if you had all your operations in China. And it was kind of a decision after I finished my studies because it coincided. What do I do afterwards? Do I go back to kind of, traditional finance? Do I look into the blockchain space more broadly? I did some things there as well, specifically related to DeFi. Or do I do something completely different? And I saw the synergies with the center specifically looking into electricity consumption. So to actually develop our electricity consumption index. At some point, I was taking it over and made some adjustments, put in new content, right? But this is kind of how I ended up in the center, because I think I had this, I would say, expertise in how the industry works, specifically which machines I use, and these sort of things, right? How the market works. And I tried to bring this knowledge to my work at the research center and work on improving specifically the theoretical estimates that were out there at that point, which culminated in multiple updates of our methodology. But then, and I think one of our key points that we're discussing today, I had recently after I joined, I had contact with kind of the industry, and over time, this connections developed. This is how I got in touch with kind of the Bitcoin Mining Council, but it took quite some time to find a bit of a common ground, right? So how can we leverage synergies between what they are doing and between what we are doing, right? Which early last year, fortunately, culminated in the creation of this survey, where we found that, well, how deep can we ask you miners, right? What can we ask you about? Making it still in a way that is in line with our own kind of internal guidelines and how you need to do research, right? In terms of granularity. And then also we have this kind of naturally bit of vetting process. So we made sure that those people who are invited to participate in this survey are really participants in the industry, right? So it's not just someone who fills out some link that they got somewhere from and we just everything that people provide to us. No, every miner has been individually onboarded. And finally, last week, all this kind of work culminated in the publication of this report. And I'm very, very excited to be here today to kind of talk about it.
So you mentioned mining in China, and that's some of the expertise you brought to Cambridge and updating the model. Can you talk about specifically maybe what you saw in your mining operation and then maybe what they were doing, maybe not wrong, but what you changed in this new presentation or new report?
It was basically, I did not directly invest. I started mining because having this kind of finance background, you like unite cash flows and these sort of things, unite DCF models. And this is kind of how I came into it. To me, it was a bit more related to my past mining than just, buying, hodling Bitcoin. This was interesting, right? But I think the mining space was a bit more related to my finance past and was more exciting and more interesting, frankly. And I think there were at that time definitely great opportunities, right? We still had the entire supply chain essentially was in China, which was very convenient because you had the manufacturers there, you had the farms there, you had the repair centers there. So everything was pretty much established. And if at that point globally, the US had some hash rate, right? But in 2019, it was still a completely different environment. Everything was very, very much focused on China. And the first kind of thing that disrupted my operations a bit, frankly, and I'm sure you know what a S17 kind of issue where with the heat sinks, and specifically if you're not managing them yourself, you're completely reliant on, I had obviously trusted kind of parties, but still with the repair centers, if you can't do it yourself, right, you're 100% reliant. And, a lot of bad batches. And this was kind of the first thing. And in the end, after 2021, specifically, if you were a small kind of sized mining operation, there was COVID, logistics was terrible and it was banned. I was even happy that I received a couple of machines, that I could sell at some point and somewhere. And I think it was a very rich experience, if we want to call it like that. And definitely a lot of things I've learned. And currently how I transport this knowledge specifically to my current role is just kind of, first of all, having a bit of the established network to a lot of folks, right, globally, which obviously is incredibly important for doing things like this survey because you need to get miners to contribute to provide data, but specifically private miners, right, who have under no obligation to provide anything to anyone except your balance sheet or your annual reports to whatever jurisdiction you are, I guess, established in. And I think these kind of things help. It also help kind of understand talking to folks, because I did never know how it works actually on the ground. So I need to admit I have never installed an ASIC. At some point, actually, I'm now aiming to buy, I don't want to name any brands, but to buy some kind of small at-home miner to just try it out a bit, to just see kind of how it works practically, because I always just saw on your pool, your hash rate and sort of things. If something didn't work, it was kind of like the operator telling you, okay, there is this kind of problem. And then you kind of managing the logistics to get it to the repair facility, more kind of having this high level view, but still, you still kind of know how things work. And I believe that definitely helped me to kind of bring this knowledge to my research.
And so it sounds like you have people that have mined before, like yourself, but maybe were disconnected from the miner. You have people that have never mined at all. And then you have people that are mining and physically working on the device itself. How do those three different perspectives how have you seen them change? Not change, but how have you seen them perceive Bitcoin mining differently? You've dealt with a lot of the headaches of a mining owner, maybe not as a mining owner who can physically access his hardware. And then, like I said, versus someone who just has heard about Bitcoin mining, but has never even attempted it. When you're in your research, did you come across, and as you talk about your research, how do those different people engage and view Bitcoin mining?
Yes, a good point. I think we specifically in my work, you work with a lot of different stakeholders. And indeed, there are some, obviously like miners who, fully, I would not necessarily say there's a lot of difference in perspective between those who, for instance, only do hosting with those who basically do everything. Then in terms of how they perceive mining, I think they perceive it pretty similar. It's more, I think, kind of the knowing the nitty gritty of all this on the ground operations that some know and some don't. But generally, people have a bit of an understanding, right? Even if you have never built something on ground, you know that if you use air cooled miners, you need to make sure the airflow is right, these sort of things. So it's more kind of the difference in my work comes down to speaking sometimes with folks who might have had no exposure to mining at all, right? Possibly to having heard about Bitcoin, if even, heard definitely, but having also a bit of a background of what is actually Bitcoin. And then even if that is there, you might have folks who might have not really even a broad understanding of what mining actually is. Currently it's changing. And so over the time I'm doing this work here in the research center, I think what we saw is definitely an increase in the understanding of the overall kind of global community from all stakeholders. And it really goes from, regular people. Like if I would ask someone on the street, do you know what Bitcoin mining is? Most likely they're going to tell you it's something with data centers and something, computing. And so it's not the complete black box. You have a very, very broad idea. And I think the same is true for a lot of, let's say, kind of regulators, policymakers, and these sort of folks as well, where you see obviously more kind of as the industry becomes bigger in some jurisdiction, some kind of stakeholders and such stakeholders are getting a much better idea of what it actually is, because they might either want to promote it in the jurisdiction or do the opposite, right? Some say, well, this is not necessarily an activity that we particularly like. So you see this kind of different perspective. But overall, I think, and one of the points in the report is as well that it should serve as a bit of a foundation, the first edition, where it starts really about what is Bitcoin firstly, and then also explains mining. It not necessarily in extreme amount of detail, but at least at a level of detail where those who go through it have some sort of, I would say, basic understanding of, okay, what are we actually talking about here? And yeah, this was also one of the kind of this educational component was, at least for the first edition, kind of a big thing for us to include, to make sure that someone who might be a newcomer has, if you start at page 1 and you finish at the last page, you kind of know on the surface of what is actually going on, from what is Bitcoin, what is mining, what is the currency of the industry, and then a bit about, okay, where things are heading.
And so it sounds like you have people that have mined before, like yourself, but maybe were disconnected from the miner. You have people that have never mined at all. And then you have people that are mining and physically working on the device itself. How do those three different perspectives how have you seen them not change, but how have you seen them perceive Bitcoin mining differently? You've dealt with a lot of the headaches of a mining owner, maybe not as a mining owner who can physically access his hardware. And then, like I said, versus someone who just has heard about Bitcoin mining, but has never even attempted it. When you're in your research, did you come across, and as you talk about your research, how do those different people engage and view Bitcoin mining? And I did read part of the report. Obviously, it's very long, but I did like it how you set that up and how you clearly state, here's the building blocks before we jump into mining's impact. The head of climate research for this project for Cambridge Digital Asset Program, what's the most surprising finding your team or yourself uncovered about Bitcoin's environmental footprint, or just about Bitcoin mining's interaction with the rest of the world?
So I think one of the most interesting findings for myself, right, it always depends a bit kind of what you expect specifically. If you're very much engaged in the industry, there are a lot of things that might be very interesting for those who might not have daily engagement or are continuously up to date with where things happening. Personally, I think the power coming from otherwise flared gas, kind of the extent, I think for me personally, one of the key research findings, because I think this is one of the best kind of use cases where, really someone is coming in and off takes energy that's otherwise really big. Because if you just flare natural gas, there's absolutely no kind of economical point to do that and no point for the environment. And if you can find, in this specific report was Bitcoin mining, but there's also HPC operations that you can build. But specifically, given the capex, given the flexibility, I think digital mining in that regard is a very kind of fitting offtake of this in this specific use case of, for instance, otherwise flared gas, and the extent of it, and then trying to convert the extent. So it was about 500 megawatts, convert this to, actual emission reduction under different scenarios, right? I don't want to go into too much detail here, but it's in the report, right? Where you have different scenarios coming global. If you use different global warming potentials and periods, if you use different assumptions for combustion efficiencies, and then in the end, trying to, show different kind of scenarios and show that there might, for instance, be even a positive effect. So not just, we're going to use something that's going to be burned anyway, but on the top of that, even possibly a bit of a mitigating effect by just using a gas engine instead of a flare stack, and possibly having a higher conversion of essentially methane to CO2. And this is what I think was one of the most interesting findings. From the importance, I think what we saw is the electricity mix was changing. I think this was not necessarily, from those who are deeply familiar in the space, unexpected, because simply, even so, and we might talk about this a bit later, we captured a lot of hash rate, right? So we captured nearly 50% of the network, but still there is a bit of a US overhang, let's say it like this. So in terms of jurisdictions, close to 50% were US located. If you look at the distribution of hash rate, it's also very US focused. So definitely, but still it shows kind of a direction, because overall, I think there's not much question about the US being the predominant kind of mining hub in the world. It's more about kind of the percentage. We do from estimates around 40% to our estimate 75%, which personally, I think the one is maybe a bit too low, but the other one is too high. So it's kind of a decentralized kind of network. Right? It's very, very hard to pinpoint or to find methods to essentially establish where folks are located. And you can try different things. We've got in the past with mining pools. Now we directly survey miners. And I think those are kind of the ways, with both the limitations, obviously benefits. So, but yeah, so much to that. And sorry if I digressed a bit. Please, if you want to drill into any points deeper. But yeah, possibly another point was e-waste, kind of the repurpose, recycling and reselling, that a lot of people, I guess, find interesting as well to see this. We have climate mitigation strategies where we show different strategies, to what extent miners are using those. We have a lot of sentiment questions in there as well. So yeah, I think those are kind of the most interesting aspect, and possibly to some extent also quite exciting.
My next question is, how do you ensure that the Cambridge Bitcoin Electricity Consumption Index stays relevant as mining evolves? And did you guys identify any critical data gaps that still need addressing, or things you'd like to explore in the next version of this presentation?
Yes, I think this is a very, very good point. So first of all, we have now, I think, two different, if I may call it, products. The first product is more on our website, and essentially the estimates you can see there are based on theoretical modeling, right? So that's a bit of the difference to the report, where if you go on the website and you see an estimate, for instance, for electricity consumption, it is essentially a daily estimate. Every day estimates are updated. And we keep the findings we had in the kind of report, and based on miner participation, the survey corroborate that our theoretical modeling in terms of electricity consumption works pretty well, because even though we had two different methodologies, at the specific point in time, which was the 30th June 2024, we saw both estimates in terms of electricity consumption from miner surveys and our theoretical modeling very closely aligned. So we see, if we use past Bitcoin Mining Council estimates as well, so we see there is an alignment even to different methodologies. So we are very confident in the electricity consumption estimate. This has been updated in 2023 to specifically account for periods of very high profitability, because there was in the past a bit of an issue where our, I would say, first model definitely had some issues when it comes to periods of high profitability. But I think the new model works really well, and we keep it up to date by essentially having what we call a hybrid top-down approach, which means that we use essentially on-chain data
Are you worried about paying monthly hosting bills or your Bitcoin mining machines becoming unprofitable during your hosting contract? If so, the Managed Mining Program by Mining Store might be for you. With a minimum investment of $50,000, our proven mining formula delivers constant returns while we handle all the heavy lifting. You'll receive monthly payouts, top-tier security, and aligned incentives. Our program minimizes the risk through at-cost mining with a profit share model and 24-month contracts. Invest smarter, earn bigger, and schedule a call today at miningstore.com to learn more about the Managed Mining Program. Your Bitcoin, our expertise. Let's mine together.
To determine profitability of mining, from that, we form a basket of real world hardware, so really existing hardware. This is based on a list that we are constantly updating. So if there are new hardware models, we're going to take them into the list. And this is kind of how we keep things updated. And yeah, I think in terms of electricity consumption, this works really well. The difficulty is really how you translate essentially the electricity consumption to emissions if we keep things at the environment, if we look at the environmental component, right? And there, in the past, you are generally reliant on so-called location-based estimates, where essentially you have some sort of determination of where mining activity is located globally, and then you can derive an electricity mix from there. But our most current data is based on our last update of what we call a mining map, which is where we work together with mining pools. And this is from January 2022, which means that quite outdated, right? Specifically with a very large share of Kazakhstan and still a very large share of China in there. And then you get an electricity mix that might not be perfectly kind of reflect how the reality looks like. And this was why it was so important to, even though having a very large kind of participation of US firms, but still seeing trends like activity coming to South America, activity coming to the Middle East, activity to some extent coming to Africa, to other nations in Asia, right? For instance, Bhutan, these sort of trends that are kind of relevant. We still saw continuous activity in Northern Europe specifically. So I think this was very important to have kind of this often anecdotally referred trends that activity is taking place now a lot more in these kind of regions. Basically, I would say validated by the findings in the report, and naturally those things heavily influence the electricity mix, right? Because specifically looking at Kazakhstan, looking at China, the share of specifically coal, even if we look at fossil fuels, right, there's a huge difference in terms of emissions per kilowatt hour between coal and gas. It's kind of like double or even more than double. So it's a huge difference kind of what, even if we have fossil fuel mix, right, like what specifically, how the fossil fuel mix, the composition of the fossil fuel mix essentially. And if you take everything together, we just see that the emission intensity is quite lower than what we currently estimate based on our January 2022 kind of mining map update. And I think this is one of the key findings that the report really helps. So while we are very confident in terms of electricity consumption estimates that we are ongoing and we provide on an ongoing basis, it's really kind of this translation from electricity consumption to emissions that is this difficulty where you need a lot of data that is extremely hard to get, as I'm sure you're aware, right? Because there is no kind of technical way to determine where, folks are located. There is no in proof of stake, for instance. It's a bit easier where you can develop like network crawlers and these sort of things to determine location. But there's just a difference between running, let's say, a Bitcoin full node and where actually mine activity is taking place. Because if you use a map of full nodes, most likely you will have, 40% in EU countries or something like Germany, most likely it was like 20% or so. If you just look at Bitcoin full nodes. And so it's really kind of important to know specifically where mining activity is taking place. And that's kind of very important just for this emissions calculation. I think this is what kind of the report can complement our more kind of theoretical work.
And there's no way, to your point, without going out in the field and really asking these large miners and medium-sized and small miners where they're located, how much hash rate they have, what's their power mix, to collect that type of data. Because the miner doesn't say, hey, I'm mining from Argentina, I found a block in Uruguay. It doesn't say that. It's very hard to differentiate the zeros and ones. And you guys have done a great job highlighting that and really doing the legwork to give us some institutional level research in this space.
Yeah, thanks a lot. I think this is kind of where we see ourselves having this great, I would say connection to the industry, but also to more the investors, regulators, policymakers, these kind of stakeholders. So I think this broad access to stakeholders we have from working with you guys to source the data to then provide something that is kind of universally useful. I think we can really function here as the bridge specifically between, let's say, kind of academia and practice, and assuming this role as a trusted data aggregator, right? So for instance, if you are a miner, and please feel free, if you are mine, listen to this podcast, so register for your files. So I really appreciate it, and collect this data. If I will reach out and ask, do you want to have your logo displayed, or don't you want to have your logo displayed? If default, we just collect the data and everything is anonymized. But if you say, hey, well, we want to be shown as contributors, that is perfectly fine as well. So really having this kind of trust in the community as well, because I think that's the big point, right? Where you need to convince a miner to give you data, because, there is just kind of the upside is quite limited. Only if there is an upside, if we're not doing it, right, to actually help us to get and really research out that it's impactful. This might be the upside, but kind of the difficulty is getting this set up in the first place. And yeah, so I really much appreciate the contribution of all of you.
And to your point, it cannot be done without these miners. So everyone who submitted data, thank you. And if you haven't submitted data, or if you'd like to participate in the next survey, make sure you follow up on the website, and there's QR code links in the report on how to sign up. One of the questions I have for you here is, how should policymakers, which are these stakeholders that you engage with, balance Bitcoin mining's energy demand with innovation, especially in regions with fragile grids or maybe stricter ESG mandates like the EU's MICA framework? How does this affect mining, and how should policymakers and people regulating the grids be viewing Bitcoin mining as a resource?
Yes, what we are trying to do is not having kind of an opinion in that regard. So we're not trying to take a position. What we're trying to do is to inform, and I think hopefully this comes also across in the report, that we are highlighting specific. We are not recommending, let's say, any sort of grid operator or policymaker to, okay, this is kind of a situation. This is what we're trying to recommend you to do. It's more kind of trying to put the information out. And if we get a specific questions, obviously we're going to answer this question. And I think there are use cases that are being described that might, in many jurisdictions, in many specific circumstances, be very helpful. But it's then basically for those grid operators or policymakers to decide for themselves how to view it. We're not kind of actively trying to influence any sort of policymaking in that regard. But we're putting out the information, right? It's out there, and those obviously who are interested, or, interest groups can pick it up, or like those stakeholders can pick it up and read it and then say, well, this is something that might be helpful to us, or it's not something we need, or whatnot. So yeah, unfortunately, I can't give you a specific answer for that. We're really trying to keep our impartiality here. What we're really trying to do is aggregate information, put out the information, and then let the public take over the conversation.
No, but I love that, because it provides, you guys are a neutral force and neutral data aggregator that then these policymakers can look at as someone without an incentive to, let's say, make Bitcoin mining, or you don't have a financial incentive to grow it. You're more just reporting on the facts. And that, I think that's a key to moving this conversation forward. How did you guys come up with the case study? So you guys interviewed different groups. You came up with the question, the report says, for example, beyond baseload, can digital mining help support power grids? And then you answer that question. You might have a couple of charts and a case study. Can you talk a little bit more about maybe how those were conducted? And you mentioned the natural gas opportunity. Maybe if there's other case studies that kind of highlighted something that you were not expecting or didn't know before you started this journey.
Yes, so happy to say a couple of words on the case study. So the case studies are all based on public information. So that's basically, the case studies were used to, I would say, make explanations more tangible, right? Because sometimes you're going to get lost in descriptions, in these sort of things, right, that are a bit more abstract. So after explaining certain concepts, these sort of insight boxes and case study boxes would help to essentially make kind of this entire concept that is being described, or show a real world use case for this concept. And I hope they are helpful, but it all is based on public information. So we did not interviews or anything in that regard. And Yeah, so I hope that they are basically just there to really kind of make those descriptions, for instance, for, as you said, the topic beyond baseload, which essentially kind of demands a response, right? We have the cruiser case study for flare mitigation. We have a couple of other case studies as well for what kind of with the heat project in Finland, right? Where they utilize waste heat and things. We have some insight boxes that should also help kind of make certain concepts a bit more kind of tangible to the audience. This is why we have them in there. And I do hope that they are helpful.
I definitely think they do paint a real world picture of, to these miners, where you can point of actually where they're doing some amazing work. One of the items you guys touched on was a level of concern for selected challenges amongst Bitcoin mining firms. And the top three were long-term energy price increases, unfavorable government action, and adverse development in BTC price. Can you talk more about how you guys investigated those concerns, or did you just in the survey ask them, they rated them, and then we didn't actually investigate maybe how these concerns could affect mining as a whole?
Yeah, I mean, so basically that's based on a survey question. So essentially, I mean, those answers were given. So naturally, we did some investigation, right, to come up with them in the first place with some kind of pain points, which frankly, I think, for those who follow, this might be particularly interesting for those who might not on a day-to-day basis follow the industry, but for those who follow the industry and, starting, with this like very volatile environment in China when mining was still there, to other countries having their opinions on mining, right? This all has regular kind of implications to some extent that, are allowed to do any mining there, which naturally is a huge concern for if you build operations, there's still a lot of capex. And, those sort of things are really important. And we see it now even with Russia, right? Specifically kind of, I think it's more this kind of southern Siberian region where they first initiated temporary bans and now I think fully bans until like over 2030 or something. So those kind of things matter. We see it, in some areas in the US, it's very interesting, right? Because you have this kind of very different opinions. So there's not a US opinion essentially, besides kind of obviously the administration's opinion. But depending on the state, you might face very different kind of opinions. So I do understand the regulatory concern. I mean, energy prices, I think it's also pretty clear because, I mean, ultimately, when we did the survey as well about when it comes to cash-based expenses, about 80%. So that's kind of your major expense, right? And if you are not certain about the long-term electricity deals or prices that you are able to obtain, it's very hard to kind of model your profitability going forward. So I mean, there is, I think, a lot of backstory. We did a bit of description in the report as well about this, but basically we did not too deep investigations. I think I might put in a couple of examples, but basically all those were obtained just by miners essentially rating them.
And one of the things you also touched on was like historical trends in hash price across the different type of halving events. Is there anything that kind of piqued your interest in either Bitcoin's price or hash price or machine efficiency and those kind of macro metrics that all come down to the inputs into the profitability of mining when you were doing the report?
I think mining economics is a super interesting and really fascinating topic, right? Specifically, you have a lot of different variables. And as a miner, naturally, you need to do forecasting, like specifically where you expect the Bitcoin price to go, where do you expect hash rate to go? If we think about kind of the hash price in US dollars, there's a lot of kind of, with the Bitcoin price, you have naturally the increase in hash rate, right? You have all these components. If you just look at kind of hash price in Bitcoin, it's a bit simpler, right? Because you just know it's going down, most likely, given just the halvings, right? The point is, I think, always in this kind of conversations, the topic of transaction fees. It's just that besides some kind of temporary anomalies, so this kind of spikes, right, that we saw, where we really saw, I mean, we just need to go back to the halving. I mean, that was, I was actually observing a lot of developments specifically because I saw this fascinating, the kind of amount of revenue derived from transaction fees, right? I think it was the miners' kind of future dream of having already transaction fees being in BTC terms a multiple of the actual block subsidy. So, but this was, as we saw, really just temporary. I mean, if we look now, I mean, we are sometimes at 0 and 1 cent per rebuy and these sort of things. So there's a lot of interesting component there as well. And what I think particularly is interesting in this kind of conversation is currently, I mean, we have the block subsidy, right? That's really kind of subsidized mining firms to continue. But as we go along, halving by halving, the question will really be kind of like how this dynamic will change, right? Will transaction fees pick up, or what will essentially happen, right? Naturally, you can always say, well, Bitcoin is going to, I don't know, 800,000, 1 million or whatnot. Whether you believe, this is obviously, people have their own beliefs about this. It's just that it needs to continuously go up, right? To an extent that it covers kind of halvings and it covers increases in hash rate. And I think one of this, and this is really my personal opinion, one of these kind of points, I believe the mining ecosystem at some point will change. And we will, when it comes to particularly electricity consumption, we will peak at some point where simply miners will need to be a lot more flexible. We see it already, some miners starting to, for instance, utilize excess renewables, right? Specifically, if you have the REs, where you're not mining 100% uptime, you're mining maybe like 30, 40% uptime and really trying to capture, excess energy when it's pretty much like, we're not calling it for free, but very, very low cost. And possibly we're going to see these developments more as most likely hash price will be, in my opinion, as we move forward in time, will become a lot more volatile than it is now, simply because sometimes you might have a lot of transactions, which might significantly impact the overall block reward, right? If you have a very low block subsidy. And sometimes you might not have that much, and miners might actually adjust the activity depending on kind of the network activity at any given moment. This is again, my personal thoughts on this. So I think mining economics is already very important, but it will become much more important as we move along each halving. And generally, I think there's a lot of, there's a very specific conversation that I'm not trying to avoid and to make things not too controversial in your podcast. But I think it will be very interesting to see this.
And one of the things about hash price that you kind of are hinting at is this evolution of a Bitcoin miner from being the most efficient machine on the market, using 100% of the power, to maybe only using 40% of the time, having energy to it. You guys really dug into e-waste and the evolution of the mining machine. What came out of that from that research? And was there anything that kind of shocked you, or what were you seeing about a migration of mining of Bitcoin miners? Are they migrating from the US to other places? Can you touch on that report and on the report when it comes to e-waste specifically?
Yes, absolutely. I think this was a very, very interesting finding, frankly, because there was not really information out there, right? Specifically about we did a simplified calculation about e-waste to say this as well. But I think the key message that we found there is that, 88, close to 87% is being repurposed, resold, or recycled, which I think if you look into computing the e-waste of the industry, is to me seemingly definitely a variable that should be considered to some extent. It would have been interesting and possibly for next survey to differentiate a bit more between kind of reselling, repurposing, and actually recycling. But overall, basically the amount of e-waste, which is about what we found, about 13% of phased out hash rate, is definitely something to consider if you do, I would say, any sort of e-waste modeling. But in the past, we really didn't have much information in that regard, right? There was not really, some miners, some public miners put something on their website. So we do recycling, we do this and that, but really something on a more kind of network level where you have engagement of private miners as well. And to get some kind of understanding of, okay, what does end up as e-waste, a certain amount of phased out hardware. So I think that was really kind of an interesting finding, and hopefully something that spurs further research outside, let's say, our survey, because a lot of researchers who might want to look into this again and trying to, refine estimates or create new estimates in that regard. Possibly we're going to look into this ourselves as well. So one point about the kind of distribution of hash rate. So as previously mentioned, I think definitely something that needs to be said is that we had a lot of engagement of US firms, right? And I think this really comes through if you look at the distribution of hash rate, where we found the US at 75%, which personally I think is overstated by any means. The US is definitely, I have no doubt that the US is the world's largest mining hub. But again, where we are exactly, we have possibly been on the lower end, like around 40%, but then we are at the higher end, about 75. So it really depends kind of where we are then. But overall, I think given that the US is a very large country, you have access to all kinds of different energy sources, right? It's not a country that's predominantly powered by a specific energy source. Like for instance, when we look at the Middle East, right, that's pretty much gas. And so I think overall our findings are representative, but it needs to be said that, there might be a bit of a US overhang of participation, which still, right? I mean, we have 50% of the network hash rate. So it's, I think, still a very, very interesting insights. But yeah, when it comes to the specific kind of geographical distribution question, I think it's more about trends. So where we say, well, if you look into the current map and compare it to our 2022 estimate, we can see that, well, the US is still the number one mining hub right there. There wasn't any change. But what we see now is specifically activity in South America. We see activity in the Middle East. We see still continuous activity to some extent in Northern Europe. We have some countries like Bhutan there as well, which have been anecdotally referred to, right? We see some emerging activity in Africa. So I think it's more about kind of these trends that are often talked about, and also not so much Africa. Frankly, I hope that will change in the next report because, a lot has happened since then, actually. So, but still kind of having specifically South America in there, having the Middle East emerging. And so it's more kind of about directionally relevant developments that happened, let's say, since 2022, where this is helpful. But I would not say, well, there is that this specific percentages are something that is absolutely true, where we have also a very low share of Russia, for instance, where we know that there is definitely a lot of mining activity in Russia. China is really kind of a black box, frankly. I mean, getting any data from there, obviously you ask, but it's very hard to get any data. There are estimates out there that have some data for China. I have no idea where they get it from, frankly. But no one really knows. But there is definitely some kind of aspects that I hope that in the next survey, definitely trying to increase global outreach and keen to have more kind of non-US firms participating as well. But still, even if it's a bit kind of sample is a bit US focused, I think overall most of the findings, besides essentially the global distribution, are still very much relevant.
I definitely agree with you on that. And one of the things that you mentioned was you're getting all this research, you're not trying to make an opinion about it. How hard is it to be an evidence-based researcher versus speculating and having these opinions about all these different topics when you're putting this report together? And what goes into the hours, the team, the coordination behind a report like this? How long did it take? Can you talk more about the process of how this piece of information came about?
Yes, absolutely. I would say let's start with, I think the most important and the absolute foundation of the report is kind of trying to get a lot of stakeholders together to provide you with, in that sense, it's mining companies. This is really where things start, and a lot of work goes into reaching out, engaging, and trying to get responses, right? That there is at least, I would say, 35-40% just goes into this. And the rest is then essentially kind of the write-up. But yeah, there's a significant time you really need to do engagement. You need to get folks to contribute, to convince them that, hey, this is actually, it makes sense. You might not have an immediate benefit by spending your 30 minutes, 1 hour, depending on if you already know these questions or if you need to dig a bit deeper into your company, that it's kind of worth to spend the time, right? And I think the first edition of the report showed that, yes, it is definitely something that people are interested in. So it might make sense for me to contribute. And I think for the first edition, this was the most kind of difficult part because it hasn't been done before, at least not for mining specifically at the scale, right? We had the Bitcoin Mining Council, but it was 4 or 5 questions. So it was not that extensive. It's a lot easier to answer those questions than 25 questions that in some cases go a lot deeper than what was asked there. So in the first iteration, it was really kind of the difficulty to convince folks that, hey, well, it makes sense to contribute. I hope that we will have, with the first edition done, a good starting point where we can convince more that say, hey, well, if you had privacy concerns, look, if you want to be stated, you're going to have your logo there. If you're not, you're not, right? There is no kind of specific individual data sharing that we are doing. And I really hope this helps. But yeah, this is, I would say, one of the main power. We started with this, I think, about last year in April. First of all, you need to develop all the survey questions and these sort of things so that makes sense as well. So we had some conversations with some key players of the BMC, to give you just feedback where, you have a bit of back and forth, kind of bouncing off ideas, what is possible and what is not possible, what is too granular, and how far we can kind of still go. A lot of this kind of thought process as well. And yeah, and if you in the end have collected data, you kind of need to do the write-up, right? This is depending. This time it took also longer than expected because in the end it was okay, let's create something that really enables, someone who might not be perfectly familiar with the subject to starting at page 1, ending at page, I think like 150 something. And you might not be an absolute mining expert, but you know what Bitcoin is, on the surface how mining works, the concept of the industry, about trends, and you get a bit of finance aspects as well if you read the appendix, right? So you generate mining economics as well. So you have a general understanding, okay, what is actually happening. And we have this condensed into this one report. And yeah, this is why it took a bit longer. But yeah, it wasn't really nearly a year essentially that we were working on this combined. So there's a lot of effort that goes into creating something like this.
Ready to earn Bitcoin at a 60% discount? With BitVault, you can get access to the most efficient Bitcoin mining machines for as little as $100. No technical expertise needed. Not only can you accelerate your Bitcoin holdings, but you'll also enjoy tax benefits like 40% accelerated depreciation on mining equipment in 2025. Our low-cost energy partnerships and advanced hedging strategies let you skip the headache while maximizing your Bitcoin exposure. Join the revolution today and start building your digital gold portfolio. Invest now at tothemoon.cash. Your journey to the future of money begins here.
And now you have a great piece which you can build on top of, to your point, and you have that core kind of introduction and some of these questions on pools and in firmware. Can you talk a little bit more about how you got to the pools and firmware? So as you were digging into this report and creating it, you guys also talked about firmware and mining pools. Did you end up interviewing any pool operators or firmware operators, or was that data collected from the miners themselves?
Yes. So basically the mining pools, I took it from mempool.space. I think they do, and shout out to them. They do fantastic work. So when I look about anything related to more the specifics about just looking at blocks, right? Block compositions, other things, it's pretty much like when I look at mempool.space. Otherwise, we work with Cometrics, which also is fantastic, right? Specifically collecting data on hashrate and these sort of things. So yeah, we did not interview anyone in that regard specifically. One of the contributors was actually from Foundry to the report. So naturally, we had some conversations and really appreciated his input specifically for some nuances in the writing. In terms of the firmware, yeah, that was a survey question. So that was basically about like asking miners, okay, essentially what kind of firmware you're using. And I think findings are quite interesting. Specifically, we have what was, I think, unexpected is the large share of just stock, like manufacturer firmware. Vinish was something that I did not expect, frankly. I know that there are people were using it, but it was more than 1/4, I think, more than a quarter were using it. So that was actually one thing that was surprising. But yeah, in proprietary firmware, right, specifically, it makes sense if you're a really large mining company to invest it and build your own software, right, specifically tailored to what you need in your operations. And yeah, then you have some other operators as well. But yeah, I think it is similar to the ASIC market where it was also kind of I would say not too much of a surprise with Bitmain being heavily dominant. And then, you have the other two manufacturers, MicroPT and Canaan. This will, I think, be something where on a time series will be quite interesting to observe, right? So specifically having now Oradin, Proto, and some US manufacturers coming up to see how things change, right? Specifically, okay, this was the data point that June 2024. But if we end up at some point at the third iteration, how things change over time, right? Specifically, how market shares change in terms of the ASIC market, because so far, I think this is also where we are contributing. It was kind of known when you do research, or you need to actual data point. It's one thing to kind of like, have anecdotal evidence or know things because, that's kind of generally known as an industry practitioner. Then having actually, okay, this is a data point based on, primary data from miners. So that's specifically, if you do any research, that's just like really valuable to have this data point there. And yeah, very, very interesting to see kind of how these things evolve, specifically with most likely now US manufacturers entering the stage. And also in terms of firmware, right, how things change there as well. If we see third-party firmware usage increasing, or if we continue seeing still this quite, I think it's about 40% of a manufacturer firmware. So yeah, I think those kind of data points are specifically interesting as a time series, right? If we move along report after report, how things evolved.
And I think that is where you get a really good set of data over time where you can start telling the story of the industry, which it will be amazing to have this data set. So as I said, thanks again for putting this together. One of the last things is you kind of end the report with this idea about data center infrastructure, AI, HPC, and Bitcoin mining. Was that something that you think miners, were they saying they're looking into it or they're actively exploring it? It seemed like it was a small portion of miners. Do you expect that to be a larger portion in the future? So when it comes to AI and data centers, how are you seeing Bitcoin miners kind of transition into AI in the report?
Yes, sure. So happy to elaborate a bit on this. So that was essentially, we had only a very small question in there trying to understand a bit to what extent participants mine Bitcoin, to what extent they mine other cryptocurrencies, and to what extent they, for instance, have power allocated to AI operations. And I think this is one of these data points that we will very closely observe as, we progress, for instance, edition by edition, because that I think is a very interesting data point that you can go back historically and then compare to, for instance, new information. As we have, in the end, a more kind of a theoretical chapter, which is not based on survey data, but basically just us thinking about, well, there are kind of the synergies with AI in many ways of established mining companies, right? Having kind of power contracts, having the already existing, possibly fitting infrastructure, having the talent to diversify their business. And this was one of those things, the sentiment questions that we also saw, where business diversification was one of the kind of key areas that miners were looking at. And also, if you look into the really statements of public companies, I think miners moving to AI is something that is definitely a very, very interesting component. And we did observe this. I think it is given specifically when we think of the way how most likely the block reward will move, having a lot more volatility possibly when it comes to revenues derived from mining activity, having this more, I would say, less volatile income stream, providing AI, HPC services is quite interesting for mining companies. But on the other hand, what we see is, and I think what we found, that the amount of capex required to build this infrastructure is on a whole different level. So it is kind of, I think, in terms of the capital requirements to enter this space, it's quite a feat for mining companies, right? Given that if you want to build a hyperscaler, it's going to be very, very expensive. And so there are a lot of different angles, and specifically also trying to understand specifically the increase in demand for instance, state-of-the-art training models, kind of the computational requirements and how those have changed over time. And so I think overall, there is a lot of information in there that might help understand kind of, okay, this might be an interesting field for miners, and explained why, specifically having established power contracts, possibly some infrastructure that is already existing or can be retrofitted, and having kind of the talent pool that allows to kind of leverage those synergies. But still, on the other hand, there is kind of this capex element that makes it not so easily translatable, where I say, hey, well, we have mined Bitcoin and now we're just doing AI. We're actually okay, fantastic. Yeah, so basically one of the key differences between building Bitcoin mining infrastructure with actually building AI infrastructure is the capex requirement, where we show that essentially if you include GPUs as well, it's about 33 times. But even if you just build the infrastructure, it's already, I think, about 8 times. So while this might be a very interesting field, specifically with this very much increasing demand, we also have a couple of charts there that show where this demand is coming from by much more computationally intensive training models, but naturally, I think, mostly from inference. And we see a lot of miners looking into this now, and it will be very interesting to see specifically kind of how the power allocation changes, because currently the snapshot we have from June 2024 is, I think, a very good starting point. It will be just very interesting to see kind of how this power allocation changes, right? Most likely it's expected to increase. But as I said before, you can have a lot of megawatts of Bitcoin mining activity or generally cryptocurrency mining that might not like one-to-one translate into, okay, we build like 1 megawatt of Bitcoin mining, let's say, and 1 megawatt of, AI compute. where in terms of the cost, it's just not comparable. So, but it will be quite interesting to see how things evolve. And we see a lot of public companies looking into this. And we have, for those interested, there's a lot of information there also in terms of electricity consumption, these sort of kind of estimates, how much overall data center power usage is expected to be in 2030. So I think there's a lot of nuggets of, I will not call it nuggets of wisdom, but there's a lot of interesting information, I think, in the last chapter of the report specifically about where we are most likely heading in terms of mining. And you mentioned at some point the move towards the transaction fee-based model from currently predominantly reliant on block subsidy, and naturally having this kind of synergies in terms of infrastructure with AI makes and diversification to the business model being one of those points we found out in the survey to be specifically interesting to firms. I think this will become more and more important, and definitely something I want to monitor even in much greater detail going forward, because simply I think it's fair to say that kind of the computational demands of AI will just significantly increase. I just remembered a tweet from Sam Altman when we had this entire kind of Studio Ghibli thing coming up, and he said, yeah, our GPUs are melting, which you can imagine, right? So you need to have in the future a lot of computational power. And I think that a lot of mining firms are very well positioned to kind of capture this opportunity, becoming like a more diversified firms, where we possibly might also see firms that say, hey, well, we want to be a pure play. That's just our main business model, and we want to keep it like that. So it will be very interesting to observe this kind of different pathway miners take.
Alexander, let's close it up by talking about what's the reaction been in the public? What type of news outlets have reached out to you? Any cool appearances that you want to highlight to the audience? And like, how are you feeling after a year worth of work and really being able to see it come to fruition?
Yeah, it's very great to see that there's a lot of public interest, right? We see a lot of first of all, I think we got interviewed by traditional media like Fox News. We got naturally featured in crypto native media. There is a lot of new things coming up where we had, I think, a lot of folks were token 2049 and now coming back and see kind of the new information that is being out there. So we had a couple of requests in that regard as well to, have a podcast, have, some sort of interview or doing some other things. So there's a lot of public interest. I think this data in many cases were really highly anticipated, and then is overall very well received. Naturally, there is a bit of this criticism around still, even though we have captured nearly half of the network hash rate, that there is still a bit of the US focus, but that's what it is, right? I mean, in the end, it's, I think, a very good starting point, but there's a lot of things I think we can do better as well. And then trying to engage more people, more geographically diverse. But overall, I think what we managed to do is providing a deep insights into this very much, some very nitty-gritty data points that you usually just don't have, right? So I think we managed to provide a lot of kind of valuable insights in that regard, and hopefully create something that we can build on and improve over time, so we can really manage to capture, at some point, maybe like 65-70% of the network and having it geographically diverse. So really creating something where essentially as close to the ground truth as possible, let's say it like that. It requires an extraordinary amount of kind of engagement from a lot of different stakeholders. And I hope that with this report, we set just the foundation to do so. Personally, yes, I'm really happy because, there's a lot of work coming together and a lot of time spent on this. And also happy that it has been published, right? Because, you want to also move on to your next project at some point, and then have some a bit of time for yourself as well. But yeah, I hope that there will be a second edition, and we can continue this work, because I think it's just something that is specifically for those who are even for those familiar with the industry, but also particularly for those who are not familiar with the industry, to having this kind of data set that provides this kind of insights that you otherwise just don't get.
And some of those data set that you highlighted are 138 terawatt hours annual consumption of Bitcoin mining, 0.54% of global electricity, 0.08% of global GHG emissions, with 38.9 metric tons of carbon dioxide, 52% of electricity from sustainable sources, 82% market share held by Bitmain, which you highlighted, US being the primary hub, 75%, emerging markets of South America and the Middle East, which you highlighted. What is, if anything, like other key highlights that just like come to mind as we wrap it up here, or anything you want to leave the listener with as they read the report, something they should really focus on or really make sure they can dive into?
Yeah, I think it depends on your personal interest, right? So I don't want to highlight anything in particular because the point was really to have this very vast data set. For me personally, one of the key points were to compare our, in terms of electricity consumption, to compare our theoretical model estimates at a specific point in time, which was the time of the snapshot, 30th June 2024, with, those kind of electricity consumption estimates that I can derive from the survey data. And then given these are entirely different methodologies, and then see whether there is a very stark discrepancy, which would indicate that, possibly our theoretical model, something isn't right, or there's a huge difference between kind of practitioner insights and our theoretical modeling. But what I saw was that there is very little difference actually. So it feels that kind of our theoretical work in terms of electricity consumption has been corroborated, which is quite important because, these reports are not issued on a daily basis. So, things change quickly. We just from June last year, right? I mean, hash rate skyrocketed, frankly. So currently it might look very different, right? And so it's important to have, for instance, our daily updated estimate there that can tell you, and that it's reliable about, okay, what is the current state of today in terms of electricity consumption? And, until the next report is available. So I think this was, for me personally, one of the very important points. Also, kind of having this new insight into kind of the electricity mix, I think is very important because our past estimate is really based on very outdated data. So it's kind of important to have here an update as well. And naturally, everything is important, right? But I think particularly interesting as well was the e-waste issue, where we saw that, okay, repurposing, reselling, recycling is just a huge component. And a lot of things as well, specifically when we talk about, the amount of kind of power coming from otherwise free-out gas. And there's, I think, a lot of interesting information in there. But this is kind of my insight. But I think everything is important, and it really depends kind of if you read the report, if you're interested in a specific area. But I think we covered so much ground that, whatever you're going to look at, something might be in there for you.
And we will be linking the report in the show notes, as well as the online up-to-date kind of theoretical model that you're mentioning. So feel free to look at those to learn more. Alexander, thank you so much for coming on. And remember to mine on,